Hey everyone, this is Finding Value. I want to get into a really cool topic, commodities. And what I want to go over is I want to show you why commodities are the right play right now. I'm going to show you how they're cheap against other things. I'm going to show you some price activity, and I'm going to show you some companies and their performance of the last commodity boom that we had. I think it's all important to understand where we are in the cycle. It's important to understand past previous bull markets to see just how much fuel we could have going forward in this new commodity bull market that's about to start. Let's jump in. It's going to be pretty cool to find out about this information. So we've got commodities here. These are the commodity cycle. You can see 70 to mid 70s. We've got another top here in the 90s. We've got a commodity cycle bottom right when the dot-com bubble is. We've got another high around 2008. And here we are scraping along the bottom, which I think is the cheapest that this thing has ever been in relationship to stocks. So my opinion is that we're in a bubble in the S&P 500 and commodities are extremely underpriced. So right here, when the ratio is low, the green circles, it indicates commodities are cheap compared to stocks. And we are just scraping along the bottom. So we've got a commodity index that is extremely cheap in relationship to stocks. This is a long-term price of copper. That circle was in the 99 this time frame down here. And you can see the move in copper that ensued to 2008. This is a big move higher for copper. Looking at nickel in the previous boom, this was the bottom of the market in here. 98 is where the circle was, 98, 99. So it came up, came back, and then boom, way higher. This is a 4,000, this is a 10x in the commodity itself. So 10 times. This is the current gold to oil ratio. I just wanted to show that it is extremely cheap. I think it's at 46 or 48 right now, so we're right here. Way cheaper than everything else. This is the oil to natural gas ratio. Again, we are extremely cheap, so natural gas is a bargain and a half. So looking at previous bull markets, I've just pulled up some companies. I'm not recommending these. Chesapeake Energy could go bankrupt. I'm not recommending Chesapeake. But from that 98 circle, right here, 98, I'm going to go back a couple slides. 98, 99, right there, that bottom right here. This is the bull market we're looking at is from 98 to 2008. So from here, this was literally nothing all the way up here. And I think this was a 30 or 40x. So from 98 to 2008, I think it's about 40 or 50 times from here. I think from here, I think it's 30 times. So, 30x or 40x your money here in about 10 years time. Southwestern Energy Company, I left the ticker on 2000, even though the bottom was down here. 75 cents all the way to about $50 in about 10 years, 8 to 10 years. That's over a 50x. That's 55 times your money. Not a bad return. Range Resources, it was $2 in 2000. And that reached a peak of about 100, about 50 times your money, all the way up. And that one took a little bit longer. But let's say you peaked it here and it was around, let's say like $70, 35 times, 35 times your money. Not a bad return. CNX Resources from 2000. Look at these big moves in natural gas. Now I put a little bit of chart patterns on some of these. All right, I haven't gone over those. See these chart patterns and how they are consolidating? We just broke out the top here. That is when you want to buy. Right there. Perfect time to buy. Perfect time to buy. Perfect time to buy. And you can see in one of my other clips about natural gas and how it was a very good time to purchase. We've got good gold to oil ratio, good oil to natural gas ratio. They're all cheap. These are extremely cheap, and they just broke out of some patterns. I would be a buyer, big time buyer. Load up. Here's Rio Tinto. They're kind of a diversified mining company, but they're right there at the top, probably going to break out. RIO. Here's Southern Copper. I actually bought on this back in 2016. Yeah, I think it's 2016. Or maybe it was VALE that I bought. It was right here. Boom. I think it was 25 bucks or so. Maybe it was right here that I bought. But yeah, it's taken off. And then we got an expanding wedge here. Contango Oil and Gas from 2000 to 2008. $1.75 to 90 something dollars. Insane return. And here we are consolidating here. Right along, about to break out to the upside. Some of these are really small companies, so you got to be careful because they could go bankrupt on you. Endeavor Silver, 2002, a penny to 12 bucks. In 2002 to 2011. 9 years. 1,200%. No, that's even more than that. That's 12,000%, I think. 12,000% there, guys. Not 1,200. Insane returns. Now here's some mutual funds. I know some people they look in their 401ks and whatnot. So I wanted to look at some mutual funds. This is Fidelity Select Gold portfolio. You know, it came out of this big wedge pattern, came down, bottomed in 2016, created another wedge pattern, false breakout to the bottom, and then just kind of melting higher here, going higher. Now these are the ones that I'm extremely interested in, and I think everyone should be. This is Fidelity Select Energy Service portfolio. We're in this big downtrend. We haven't quite bottomed yet, I don't think. We got to break out of this downtrend. When this thing breaks, I think we got to be buyers of energy services. And another one, here's natural gas. Some of the smaller natural gas companies that are better, you know, they're very well run, have already broken out to the upside. We've seen that in those other charts that I showed just earlier in this presentation. Here, we're coming down and we haven't broken out, and I don't think we've broken out yet. So this is one to watch. And, you know, if you've got some 401k money and you've got, you know, you're restricted to mutual funds or something, you know, maybe a natural gas fund might be very good coming up here in the short term. So energy services and natural gas. So I wanted to kind of show you that, you know, commodities, even the base metals and some of the energy sector, they can go up 20, 30, 40, 50x, depending on how aggressive you want to get and how leveraged you want to get. And, you know, some of these companies, they could go bankrupt. Spread your money out, pick some off, maybe pick some of the small mid-cap companies, maybe not the micro-cap ones. Stick to like some hundreds of millions or something like that for a market cap. And I think in maybe 10 years time frame, these things are going to be exceptionally good investments, and they're going to be way higher. So look at those commodities. Don't be afraid to get some base metals outside of precious metals or even uranium stocks. These guys still can go up quite a bit. We're talking 10x to 50x. We might not be buying them at the bottom of the bottom on some of them, but still a 10x is exceptionally good. This is Finding Value. Hopefully this, you know, shows you where we are in the commodity cycle, gives you guys the confidence to pick up some commodity stocks. Notice how I'm talking a lot about commodities on this channel. I'm finding where the value is. I'm not finding tech companies with a ton of value right now. I think they're overpriced, and commodities are the spot to be for the next 5 to 10 years. Thank you. Subscribe, comment, and hope you have a nice day.